So, we've got a number 1 deluxe meal. Is there anything else I can get you?
Yeah, I'd also like a good night's sleep.
Excuse me, sir?
You know, the I didn't struggle all night with my uncomfortable CPAP mask, or something like the my wife didn't kick me out to sleep on the couch because of my constant tossing and turning.
Sir, we don't have anything like that here. I think what you're looking for is Inspire. It's an implant that works inside your body to treat sleep apnea without a CPAP. That way you can breathe normally and rest more soundly.
Come on! Oh, he sounds hangry. Inspire is the only FDA-approved sleep apnea treatment of its kind. It's helping tens of thousands of people finally get restful sleep. To learn more, visit InspireSleep.com. That's InspireSleep.com. Inspire, sleep apnea innovation. Inspire is not for everyone. Talk to your doctor to see if it's right for you, and review important safety information at InspireSleep.com.
Yep, let's do it. Good evening. This is Mottek On Money, number 1 for your business and consumer news here on Talk Radio 790 KBC. I'm Frank Mottek, and we're doing it live right here weeknights in the 5 o'clock hour in Los Angeles. During drive time, Mottek On Money 5 nights a week for you, live on the air. Right here on 790 KBC, streaming live online worldwide at KBC.com, and the on-demand Mottek On Money podcast for you at KBC.com, Apple, iTunes, all your favorite podcast platforms, and, of course, we're on the socials, too, at Frank Mottek on Twitter and Instagram. Stocks ending the day higher today ahead of a new inflation reading that'll be coming out first thing tomorrow morning. We're also expecting a solid start to second quarter corporate earnings this week, which the market's paying attention to. The Dow closing higher today by another 317 points on top of yesterday's 210-point rally. The S&P 500 added 30 points today, and the Nasdaq closed up 75. Stocks moving higher for the second day in a row as bond yields eased further. Treasury yields did pull back. Those impact the fixed-rate mortgage rates out there. And speaking of that, we'll talk about mortgage rates and what's happening with real estate later this hour with Jeff Lazerson, the president of MortgageGrader.com, also Orange County Register real estate columnist. The inflation reading out tomorrow is expected to show annual inflation falling to 3.1%, having hit a 40-year high last year of 9.1%. But the annual core inflation rate, which takes out food and energy, is expected to be higher, maybe 5%, still more than double the Fed's 2% inflation target. We'll talk about inflation tonight with GERARD, SCIMECA, the chairman of the free market group Consumer Action for a Strong Economy, about how inflation continues to impact you and businesses out there. Taking a look at what else is happening, the hot labor summer continues here in Los Angeles. We're watching what's happening with the second wave of hotel strikes hitting Southern California this week. And according to Variety, something new here, looks like top Hollywood players are working on a plan now to call in federal mediators to help avert a SAG-AFTRA actors strike with just a day to go before the contract deadline. According to Variety, a group of CEOs and senior executives, including Disney chief Robert Iger, Warner Brothers Discovery's David Zaslav, and Netflix's Ted Sarandos, gathered by conference call to discuss the urgent situation with SAG-AFTRA poised to go on strike as soon as Thursday. In addition to the executives discussing efforts to bring in a federal mediator, talent agency chieftains, including Ari Emanuel of WME, Brian Lord of CAA, and UTA's Jeremy Zimmer have reached out to SAG-AFTRA leaders in recent days to offer assistance that could stave off a second Hollywood work stoppage this summer. The writers, of course, still on strike. We will be following all of this closely as the labor action continues this summer. The Alliance of Motion Picture and Television Producers, which represents the major studios, has requested assistance from the Federal Mediation and Conciliation Service. It's not yet clear whether SAG-AFTRA, which represents 160,000 members, will be amenable to the idea, as it would require extending its negotiations for a second time. This according to a Variety report out this afternoon. Looks like federal regulators have ordered Bank of America to pay $100 million to consumers for allegedly mistreating them with unfair fees, withholding credit card rewards, and opening fake accounts. Now, here's some good news. Consumers tangled up in that scandal do not have to do anything except to wait to get paid by the bank if they've not been paid already, according to the Consumer Financial Protection Bureau. Bank of America shares moving higher on that news by 1.3%. Looks like the federal regulators have ordered B of A to pay $250 million for allegedly charging unfair fees, withholding credit card rewards, and opening flat-out fake accounts. Let's bring in the expert now, Gabriel Wisdom, Managing Director of American Money Management, author of Wisdom on Value Investing, as we cover your markets, the money, the economy, and, of course, what's happening with the banks, AI, crypto, and the whole works. Gabriel Wisdom, thank you very much for coming to the line here, and pretty nice rally again today here ahead of the inflation number out tomorrow. Give us your assessment of things here at the moment.
Well, Frank, we're seeing more sectors slowly growing again. The transportation index, in particular the airlines and cruise ships, have been packed with tourists, and it's showing up in the earnings. The trucks and rail cars that haul merchandise to be sold to wholesalers and retailers, they're starting to pick up. They hadn't been doing so well. Demand for civilian aircraft is also flying. There's been a boost from the onshoring and manufacturing and public spending on infrastructure movement for manufacturing. And finally, semiconductors are seeing an upturn in earnings. The S&P 500 semiconductors industry is suggesting that semiconductor sales have actually bottomed and should be on the rise for the remainder of this and next year, which bodes well for production, in particular all things intelligent, like those electric cars. So things are looking up, not to say that there isn't plenty to worry about.
Certainly. On the air live with Gabriel Wisdom with American Money Management. What do you think is going to happen tomorrow when we get that inflation reading first thing in the morning?
Well, you mentioned the two different data points on inflation, and that's exactly what Federal Reserve Bank district presidents Mary Daly at San Francisco and Loretta Mester out of Cleveland have been talking about. They just said this morning inflation is too high. More rate hikes will probably be necessary to bring it down. The consensus now, and that's a 92% probability consensus among analysts, is that we'll see a 25 basis point hike, a quarter of 1% at the July 26th meeting. Now, we've seen a handful of predictions since the beginning of the year, and the gulf hasn't been this wide in 2 decades, according to a Bloomberg research piece. We've got on the one far end, we see Thomas Lee and Associates at Fundstrat predicting a strong economy, and the market's rising another 10% from here. It's measured by the S&P 500. The most bearish end, Piper Sandler, is predicting the market will be down some 27%. This is according to research compiled by Bloomberg. So I'm not sure if that's good or bad. Usually the crowd is somewhat wrong.
Very interesting. Banks still very much in focus. Today, B of A got attention for this settlement with the federal regulators over allegedly B of A charging unfair fees, withholding credit card rewards, opening fake accounts, and so forth. B of A stock actually moved higher on that news. But the other big concern in banking, as we saw earlier this year with several bank failures, involves commercial real estate. And I don't know if you saw the latest write-up recently, even Newsweek now on this story. As commercial real estate failures continue to loom, some have brought up concerns regarding how this could result in the collapse of some banks. And a series of tweets this week, the CEO of Reventure Consulting detailed how the commercial real estate crash is happening and how it could impact small banks across the nation. And he explained that commercial real estate owners are currently facing a double-pronged issue due to rising interest rates and a decline in revenue in properties. We're seeing a bunch of buildings here in the Los Angeles area at risk of foreclosure. Some have already been turned over to lenders. What's your assessment here? What's going on with commercial real estate and potential impact on the banks and the overall economy?
Well, Frank, the real estate and that kind of collateralized debt has always, when there's stress and failures, that's always led to recessions, and the higher mortgage rates absolutely killed the refinance boom. And I think we're going to feel some of the fallout here. Money is tighter. In fact, the amount of money in circulation, M2, is at a 90-year low. I mean, that takes us back to the Great Depression. So money is very, very tight. I'm just hoping the Federal Reserve won't overdo it. According to the latest S&P CoreLogic Case-Shiller U.S. National Home Price Index, prices actually increased for the third month in a row, which would signal a recovery. But at the same time, there have been a number of research pieces out, Fannie Mae among them, indicating that people are only moving if they have to, that they they don't believe this is a good time to buy or to sell.
On the air live with Gabriel Wisdom, and certainly this is a company town, entertainment industry, very, very big here. A lot of people rely on it, and it's been a terrible year for a lot of people, out of work really since May, since the writers' strike and leading up to it, and now the possibility of an actors' strike this week. Looks like, according to Variety, they're trying to get federal mediators now involved to avert another Hollywood strike. What's your assessment of what's going on here with the media stocks and the whole entertainment industry hanging by a thread here?
Well, yeah, I think, Frank, that the media stocks and the media sector, it should be on everybody's watch list if you're a long-term investor. You want to buy low and sell high. And many of these companies are low. Maybe they're going lower. Disney, for example, has been very, very soft. They're all soft. And some of this has to do with mounting wage inflation pressures. That's what these unionized strikes are about. But we've had several waves of inflation, and right now it's labor inflation. But I think that if you're going to be a long-term buyer, the media stocks are standing by, particularly if we go into a recession. That's when the public, not just domestic but worldwide, wants more entertainment. Right,
and they're usually the first ones to, among the first ones to recover coming off a downturn.
There's no question about it. Media has great profit margins right now, and rightfully so. You know, inflation has been so widespread, so severe in many cases that people who work for a living, most of us, we want to keep up. So that's what these strikes are about.
All right, and of course, companies looking for ways to thin the herd, maybe through AI, virtual employees. We talked about that recently with an expert on that subject. Digital employees. We got robots on the job. We got those robotic couriers running around Hollywood and other parts of Los Angeles these days. What about AI and anything that's caught your attention there?
Well, it's very exciting. Sam Altman, who's one of the founders of ChatGPT, along with Elon Musk and others who've been involved in AI, are really concerned about the increasing amount of energy that's required for robots, for robotization, automation, and artificial intelligence. And so Altman now is moving toward fission nuclear energy and has put together an investment group to hopefully provide cheap energy for AI. Bill Gates, in his blog today, interestingly, said that artificial intelligence could undermine elections and democracy. These deep fake issues are so widespread, a tally of some 500,000 video and voice deep fakes are going to be shared on social media websites around the world this year, according to a Deep Media Project's announcement. And Gates did say, now Microsoft is the leader in ChatGPT. They've got the license. They've spent the most money on this. But Gates is saying that AI hopefully can help identify the deep fakes as well as create them.
Isn't that something? So people see these little videos of these fake conversations involving politicians and take it as news these days.
That's right. There's one that was mentioned in the Gates piece in which former U.S. Secretary of State Hillary Clinton is seen endorsing Florida Governor Ron DeSantis for president. Well, we know that's not likely. But it's very believable, and it's all because of AI.
Right, because it sounds like her, it looks like her, or whatever, and or anyone. So that is definitely a big issue, is affecting broadcasters as well. So we're watching that very, very closely. And what about the crypto space? Let's take a look here. We see Bitcoin holding up pretty well in the face of a lot of uncertainty. Still above 30,000 here. Gabriel Wisdom, your thoughts on what's happening with the cryptos here now?
You know, I think the next phase for crypto, Frank, is going to be a Wall Street phase. BlackRock CEO Larry Fink has had a total change of heart. He was a big skeptic, along with Jamie Dimon at Chase. He calling crypto at one point an index of money laundering. Well, he said this last week that crypto could revolutionize finance. Now, what he's excited about is getting the SEC to approve a Bitcoin exchange-traded fund or some other traditional investment vehicles where BlackRock and other Wall Street firms can profit off the trading of crypto and digital assets. That's what they want. I'm not sure anybody wants to be a long-term owner unless they're convinced of.
When picking a commerce platform, you have two choices.
Oh, you piece of...
Or,
Yeah!
I prefer, don't you? That's the sound of selling on Shopify, the all-in-one commerce platform that supercharges your selling. Online, in person, on social media, and beyond. Why battle inferior platforms' weak tools?
You...
Lack of brand control.
That looks like...
And limited integrations.
Would have helped to know this.
Stop leaving sales on the table. Join the millions of businesses around the world growing on Shopify and get the industry-leading tools from the best converting checkout to powerful order management features. Gain control with code-free site design and harness Shopify's limitless integrations for limitless growth. Shopify.
Less. More.
Sign up for a $1 per month trial period at shopify.com/music23. That's shopify.com/music23. Shopify.com/music23.
For a limited time, Sweet Deals is offering qualified listeners the vacation of a lifetime. An all-inclusive 5-day, 4-night stay in a suite for just 2 adults and up to 2 children in Cancun, Mexico for just $299. This opportunity is valued at more than $2,600. That's right, a $2,600 vacation for $299, and it's all-inclusive, meaning all your food and drinks are included. Attendance is required at a presentation for Vacation Club ownership, but who cares? There's no purchase necessary. And you have a 30-day money-back guarantee if you change your mind. Do not miss this exclusive luxury vacation offer from SweetDeals.com. $299 for 4 nights at an all-inclusive resort in beautiful Cancun, Mexico. Go to SweetDeals.com right now and snag this once-in-a-lifetime offer. That's SweetDeals.com.
Fundamentals. But in terms of the popularity of Bitcoin and the other top 10 cryptos, the trading is quite lucrative. Now Wall Street wants a piece.
Very interesting. Of course, they keep talking about how crypto is used in criminal activity. Well, so is cash, of course. It's an interesting argument. And according to one of the experts we have on here, all blockchain trades, Bitcoin included, are traceable. So that's actually one advantage. How they've been able to track down some of these scammers and around the world. So that is something to keep in mind. Any specific places here, Gabriel Wisdom, where you are putting money now and or taking it off the table?
Well, I mentioned the media stocks, Frank. I think it's time to take a hard look at those for the long term, thinking 3 to 5 years out. You could buy an exchange-traded fund that covers most of them, including the new media. Meta, by the way, has launched its Twitter competitor, and this thing has grown vertically. Unbelievable. They call it Threads. Now, Meta has a great track record for copycat products. They've got Instagram, which is the answer to Snapchat, Facebook. They've got they took over Craigslist and eBay pretty nicely with an imitation, and now they're out twittering Twitter. I guess they'd be a media stock. Also, a possible recession, I think, might make natural resources even cheaper. Brazil has one of the most beaten down markets in the world, and they're a major supplier of the kinds of basic materials that we need. There's the iShares Brazil Exchange Traded Fund, EWZ, Echo Whiskey Zulu. I think that looks interesting. And a second play on resources might be the energy sector. Oil and gas, it's unpopular again, but it's absolutely necessary.
Certainly. And zooming out for just a second while we have you on the air here, Gabriel Wisdom, a lot of business people I talked to wondering how many more rate hikes are we going to see here by the Federal Reserve after that pause recently? Now the expectation is another bump up here this month, perhaps another one before the end of the year, and maybe another one early next year. What's your prediction of where rates go from here?
We're in a rate cycle of sorts, and we know that cycles are very repeatable. And when excess rules the market and prices are out of harmony with intrinsic values, whether the high or low, eventually we reset to some equilibrium. And the same goes with the Federal Reserve's rate hike cycle. I think there's probably 2 more rate hikes. We'll see higher interest rates then. And we've seen the effects in commercial real estate already. There's some $1.5 trillion in mortgage refinancing coming over the next 2 years. And I don't know that a number of these projects can last if they're sustainable at much higher interest rates. So my hunch is that we're toward the end of the rate hike cycle.
All right, terrific, Gabriel. Thank you very much for taking the call live with us here this evening. That is Gabriel Wisdom with American Money Management, Managing Director at American Money Management, based here in Southern California, and author of Wisdom on Value Investing. Always great to have you with us, Gabriel. Have a wonderful evening. Thank you very much for taking the call here tonight.
Thank you, Frank.
Don't give in to that pain in the neck or any joint pain. Take control. Take back your quality of life today with the help from QC Kinetics. It's Frank Mottek here. QC Kinetics is helping people every day here and all across the country with their amazing non-surgical treatments that repair and restore damaged joint tissue. They use the latest advances in regenerative medicine, taking your own body's healing agents and concentrating them right in the area where you have the agonizing pain. This incredible non-invasive approach helps you take back control of your body, relieving the pain in your knees, hips, shoulders, or back, and no invasive surgery, no harmful drugs or steroids, and no downtime. Summertime needs to be about having fun out there, making memories, golfing, hiking, enjoying the great outdoors. Take control now and start living pain-free again. Call QC Kinetics with locations in Glendale, the city of Orange, Mission Viejo, and now also in Costa Mesa. Call 213-997-PAIN. 213-997-PAIN. Again, that's 213-997-PAIN. 790 KBC welcomes, you guessed it, Bryan Adams, the So Happy It Hurts tour with Joan Jett and the Blackhearts coming to the Kia Forum on July 29th. Tickets are on sale now at Ticketmaster.com. Right now, caller 9 wins at 1-888-790-5222. You get a pair of tickets to the show if you're caller 9. Call right now, 1-888-790-5222. I want to hear a little bit more of the song. One of the greatest, Bryan Adams, coming to the Kia Forum on July 29th. Mottek on Money continues here in 790 KBC. The stock market ending higher with the Dow up 317 points at the close at 34,261. The S&P 500 moved up 30 to settle at 4,439. The NASDAQ gained 75 points at 13,761. The yield on the 10-year note has eased to below 4% now at 3.97%. That's the one that impacts the fixed-rate mortgage rates. And we'll talk mortgage rates and real estate coming up later this hour with Jeff LAZERSON, the president of MortgageGrader.com, and also Orange County Register real estate columnist. Tomorrow, inflation will be in focus. We'll be getting the new reading on consumer prices. The June Consumer Price Index will be out first thing in the morning. Expected to show headline annual inflation falling to 3.1%. That's the expectation. We'll see what happens in the morning, coming off the multi-decade high of 9.1% last year. There was a 40-year high for inflation. We're still feeling the impact, of course. And the so-called core inflation rate, which takes out food and energy, is expected to be elevated at 5% tomorrow, still more than double the Fed's 2% inflation target. So let's see what happens tomorrow morning and what kind of market reaction we might see. The price of gold moving higher, up $2 at $1,939.50. The price of oil also elevated, up 2 cents at $74.85 a barrel. In the cryptos here, we see a Bitcoin pulling back about $20, still above 30,000 at 30,563. Ethereum up 2 at 1,877. And Doge, we haven't heard Elon Musk talk about it lately. Doge at the moment hanging in there at 6 cents. Good evening. Mottek on Money continues here in 790 KBC. Businesses and consumers still wrestling with inflation. We'll be getting a new reading first thing tomorrow morning on inflation. In the meantime, this summer of labor unrest continues as people struggle with the cost of living, which is TOOC, totally out of control at this point. We're seeing, as you heard on the 790 KBC newscast, UPS and the Teamsters locking horns and could be heading to a strike this week. SAG-AFTRA, the Actors Union, also might strike this week, on top of the Writers Guild, still on strike for 2 months and counting. And the hotel workers also striking again this week here in the Los Angeles area. A lot going on. And inflation is a big factor here. Let's bring in GERARD SCIMECA now, chairman of the Free Market Group Consumer Action for a Strong Economy. GERARD, thank you very much for coming to the line and give us your view of what's happening with this economy and inflation here at the moment.
Hey, Frank. Thank you for having me. Well, I think that you nailed everything as far as the problem with the jobs reports. We'll see tomorrow. There are about 500,000 people now that are taking an additional job, and hours are being cut, and a lot of the jobs that are being created are in the government, more government than any place else. And then they're also revising the past jobs reports downward by over 100,000. So the economy is very stagnant, and one of the major problems, as your listeners well know and you follow, has been inflation from a lot of the profligate spending coming out of Washington. Now you have the Fed, who is raising interest rates in order to pull the economy back, lower wages, so if people don't have money to spend, there can't be inflation, which is completely sort of the insanity of it. I mean, you show this compassion by spending on all these benefits for people, and then the government turns around, Federal Reserve, and now makes everything much more expensive. And one issue that we are addressing head on is something that will really impact consumers, especially lower income people. But we all have cans in our pantry, whether it's dog food, cat food, soups, pasta, meats, corn. It's one of the most affordable staples in our kitchens. And there's one company by itself, Cleveland Cliffs out in Ohio, that is petitioning the Biden administration for up to a 300% increase on imported tin plate steel. So right now, U.S. steel manufacturers cannot supply all of the steel that U.S. can makers need. So this will be very inflationary, up to a 30% increase in canned items, which is, for something that you bought for $2 before, it's going to be very close to $2.50, if not more than that. So that would be a huge disaster for the economy, and it's also a job killer in areas like can makers and agriculture.
Isn't that something? Well, thanks for bringing that to our attention on top of everything else. What about the job numbers we've been getting? Are you seeing those with skepticism? You're not counted. If you're not looking for work, you're not even counted in the jobs report, right? So should we be skeptical of this low unemployment rate?
I think the Biden miracle is a lot of smoke. There's several million, at least 2 million people who didn't return to the workforce.
When picking a commerce platform, you have two choices.
Oh, you piece of...
Or,
Yeah!
I prefer, don't you? That's the sound of selling on Shopify, the all-in-one commerce platform that supercharges your selling. Online, in person, on social media, and beyond. Why battle inferior platforms' weak tools?
You...
Lack of brand control.
That looks like...
And limited integrations.
Would have helped to know this.
Stop leaving sales on the table. Join the millions of businesses around the world growing on Shopify and get the industry-leading tools, from the best converting checkout to powerful order management features. Gain control with code-free site design and harness Shopify's limitless integrations for limitless growth. Shopify.
Less. More.
Sign up for a $1 per month trial period at shopify.com/music23. That's shopify.com/music23. Shopify.com/music23.
Stacking Benjamins with Joe and his good friend OG not only has great financial insight, it's laid back with humor too.
Dollar cost averaging works because everything else doesn't. Let me put that a different way. But dollar cost averaging works every time. Just keep buying.
60% of the time, it works every time.
People spend a lot of time, OG, worrying about when to buy.
This is really simple. You should invest when you have the money, and you should withdraw the money when you need the money. Boom.
There it is.
I believe they call that a mic drop.
The Stacking Benjamin Show, available on YouTube or wherever you listen.
Probably because the benefits were so advantageous and better than work that aren't even being counted in the unemployment numbers. So if you threw those numbers back in, you'd see at least a 2% spike in unemployment. But that is, oddly enough, what the Fed is shooting for. The Fed is trying to create more unemployment because they have that number. The name escapes me now, but where they feel like the economy is at equilibrium. If there's unemployment is below 5 or 4%, they feel like it's too hot and so they want to cool it down, which is, again, it's something to wrap your head around. But you're really not seeing a lot of productive private sector jobs being created. A lot of jobs in government, and a lot of people. It's the DoorDash economy. People are, again, when 500,000 people now have taken a second job, that's kind of cannibalizing the numbers. Those aren't new people that are employed. Those are people working twice as hard.
Sure. And the Fed is focused, of course, not only on jobs, but inflation as well, and trying to get inflation back down to that 2% target. And that's the reason we're told rates are being raised to slow the economy to get inflation back under control to the Fed's 2% target. And that's certainly not eliminating inflation, but getting it down to 2%. And it's more than double that right now. What do you think is going to happen tomorrow morning when we get that new reading on inflation?
Well, there'll be a number. I'm not sure how accurate it'll be. We'll get the real number probably 2 months from now. It's hard to say. There might be a boost because of summer employment, and if tourism is picking up. I know there are a lot of things holding the economy back. For example, the government's been very slow in processing visas, and that's been hurting the travel industry because it's making it more difficult for people to come to America, spend their money, and take a vacation. Hopefully we see something more in the private sector, but there's a lot, as you know, a lot of this is on the supply side. We had the supply chain shortages really hurt us back in 2020 and 21 after COVID. And like with this tariff, which we call a can tax, which will be devastating because there will be a lot of people or companies who are not going to have enough. There's not going to be enough tinplate steel to go around. They're not going to be able to make as much products. You're going to see shortages on the shelves of basic staple items. And when you have 50 million people who need some kind of food assistance every year, they require, depend upon pantries and food banks. These are not, you don't get caviar out of a can. These are the most affordable food items, and they're going to get walloped by this kind of, artificial tax to pad this one company's profits. And we think that could have a real impact on, inflation as well as the available food and food insecurity.
Right. Well, definitely going to be watching for that. And in the meantime, the Teamsters and UPS locking horns here. I'm looking at the latest report here. The general president of the Teamsters hit UPS today for its underpaid and overworked employees. In his words, responding to a Twitter thread from the company about the benefits of working part-time. His comments coming amid high tensions between the Teamsters and UPS. Negotiations on a new contract between the two collapsed last week as the July 31st set date when the current contract expires for a Teamsters strike inches closer. You've, of course, heard what's happening here in Hollywood and also with the hotel business under tremendous pressure with the union striking against the Los Angeles area hotels. So obviously the cost of living, a very, very big part of this equation here. And are you expecting more labor unrest as organized labor fights for its members to survive these days?
Yeah, I think until we have monetary policies that are actually encouraging investment, and my own personal view is that the continued interest rate spikes, first of all, they started too late. The economy had already really started, hitting potholes back in early 21. But, it's tough. The UPS workers, it's very competitive. I mean, you have Amazon and as well as the USPS, which loses money, but that doesn't matter because we, the taxpayers, keep that afloat. But you have a lot of third party, and I said DoorDash economy. It's the cabbies versus the Uber drivers with UPS. So these, guys, people work all day long processing packages, driving trucks, carrying heavy loads, and there just is not the scale there as in a growing economy where they can have the kind of benefits and wages they expected in the past. It's going to be very difficult for these companies to meet these demands. So we just hope that, they can figure something out. It's not where they each have a gun to each other's head and you both wind up in a worse position than before.
Yeah, very tense time. Thank you very much, Gerard, for joining us live here tonight. We'll continue to follow this closely. Great to speak with you. GERARD SCIMECA, chairman of the Free Market Group Consumer Action for a Strong Economy, live with us here tonight on Mottek On Money on 790 KABC. Uber stock, by the way, was up nearly 4%. This after reports that its chief financial officer is planning to leave the company though the timing of the exit is undetermined. And Amazon shares up more than 1% today as Amazon began its Prime Day summer sale, which actually lasts a couple of days. Folks, it's jarring to have a car accident and hard to think clearly when you're hurt. So my friend, attorney Clark Fielding of Fielding Law, created something to help you. It's a guide called Be Prepared Before a Motor Vehicle Accident. The guide is one page, fits in your glove compartment, and gives you everything you need in case you are hurt in an accident. Go to clarkthesharklaw.com and download your free one-page guide. Keep it in your glove compartment and put Clark Fielding's number in your phone under the word accident. So all you have to do is hit the number when you need him. Tell your family and friends to do the same. So if you are injured in an accident, call the one we all trust, attorney Clark Fielding. The number to call, 833-88-SHARK. That's the number, 833-88-SHARK, 833-88-SHARK. And download the Be Prepared Before a Motor Vehicle Accident Guide at clarkthesharklaw.com. Again, that's clarkthesharklaw.com, clarkthesharklaw.com. Mottek On Money continues here on 790 KABC, turning to the mortgage business and real estate now. If you're a home buyer waiting for a return to super low mortgage rates, don't hold your breath. The era of 3% interest rates for a 30-year fix is over and unlikely to return anytime soon, perhaps for decades, according to the chief economist at the National Association of Realtors. Lawrence Yun is saying one can never truly predict the future, but he says, I don't see mortgage rates returning back to 3% in the remainder of my lifetime. Lawrence Yun, of course, has talked to him for years as the chief economist at the National Association of Realtors. 30-year fixed-rate mortgages of 3% or less were an anomaly related to the pandemic, lasting from about July of 2020 to November of 2022. Recently, they popped, again, but now they're pulling back. Let's get the latest now from Jeff LAZERSON, the president of MortgageGrader.com, also Orange County Register real estate columnist. Jeff, thank you very much for coming to the line here. First of all, how are the rates looking now?
Not bad, Frank. There's some outlier lenders out there that are just shooting amazingly low prices compared to the Freddie Mac rates out there. So, for example, before we went on the air, I did a search. I found a 30-year fixed at 6.25% at one point, a 15-year fixed at 5.75% at one point. So that's up to $726,200. And the high balance, so that's $726,201 to $1,089,300 in LA and Orange County only. That's at 7% at one point for a 30-year fixed and 6.5% at one point for a 15-year fixed. So very, very good pricing, just compared to the rest of the herd out there, because a lot of lenders are north of 7% right now.
All right, where do you see the rates go from here?
Well, I'm saying that they're going to go up north of 7 as the Fed, raises a little bit more. Last day or two, interestingly enough, the bond market had rallied. I can't quite figure out why, but it did. And so last couple of days was good. Last week was miserable. Rates were really tough. So I'd say it's going to hit 7%, and then by the end of the year, it's going to really come crashing down, maybe to 6 or just under 6%, somewhere in there, once the recession takes hold and once the Fed does enough to choke the economy and stop the employment.
All right. And what do you see ahead here for home prices, which have eased, according to the latest numbers we got from CoreLogic, certainly have eased over the past year or so now?
Well, Frank, I would tell you that home prices largely are going up, actually, what I'm seeing. So, for example, I talked to a client that bought in 2 years ago at $1.8 million down in South Orange County, and I'm talking to him about buying another place, and his house went up to $2.5 million in 2 years, and these were sort of the rough 2 years. And in the shorter timeline, in the really narrow timelines now, we're still seeing in different pockets pricing moving up. So coastal areas and high business centers, there's still incredible demand, and the inventory is still just abysmal. So anything that's worth anything near its weight, it's selling. Now, there are a lot of people that are just overpricing to see what the market will hit. and their houses are sitting. But I'm telling you, Frank, it's still going up because there's just not much to buy, and there's still plenty of people that want to buy.
So the asking prices are going up, or the prices actually paid going up?
Well, I think both, actually. I think the asking prices are going up, and what's being paid is going up. At least this is with the realtors and the home buyers that I'm dealing with. This is what I'm seeing in person. It's not moving up tons, but it's moving up. It's not going down. Now, it was going down in, say, the first quarter of this year or so, but I would tell you in the last 60 days it's just changed direction again, and it's just moving because there's nothing to buy, and people can't figure out where to park their money, and so there's it's just that whole demand issue. It's just there's so much demand and there's so little inventory that it's pushing prices up again.
All right, and what's happening on the lending front with Fannie Mae, for example, condo financing, and I think you've written up something about that recently. What are your thoughts about the lending side of all this?
Well, the lending side is pretty messy. Fannie Mae, because of Surfside in Florida, the collapse of that condo project, they're just watching very closely condo complexes, and they're removing them from eligibility. And if you're not Fannie eligible on a condo, that means you can't get any loan, or the loan that you can get is going to be 2 or 3% higher than a Fannie loan. So that's just not very good on the lending front. And the lenders themselves, Frank, here's a conversation I'm having with a bunch of my friends. We're all, the people I grew up in the business with, we're all 55, 60, 65. And a lot of us are starting to talk about retiring, not because we want to, but because we don't see the other end of this cycle anytime soon. Just like you had mentioned about the NAR chief economist Lawrence Yun, how he was saying he wouldn't see low rates in his lifetime again. We're saying to ourselves that we don't even see a big spurt of business for several years because everybody's sitting on low property taxes and low interest rates, and other than life cycle events, so that would be divorce, death, job transfers. Other than that stuff, there's not much action. There's a little bit of builder business. Builders are about 12% of the market, but many of us are just thinking that we have to think of other things to make a living besides what we do in the mortgage business, including me.
You going to be driving Uber? What are you thinking? Well, I'll do it, and then I'll pick you up, and I hope you're a big tipper. Yeah, absolutely. That's a lot of people are doing these days. And let me ask you this: with all the labor unrest, Jeff, impacting the entertainment industry, are you seeing that already impacting real estate here? Are people bailing out, or what's going on?
Not yet, Frank. The people have a lot of equity. The people seem to still have savings, or they have retirement money that they can borrow from. So I think it still needs to bleed a little bit more until people start having what we call distress sales. It's not really happening yet. It's coming, though, and it just depends on how hard the Fed pushes and how much overreach they do on the rate increases. When people start, really hurting financially, then you're going to see more of that distress sale happening.
Right. Jeff, thank you very much for that comprehensive update. As always, that is Jeff Lazerson, the president of MortgageGrader.com, also Orange County Registered Real Estate columnist. Jeff, thanks very much. Have a wonderful evening.
Thanks, Frank. And
this is Mottek On Money here on 790 KABC. I'll be back again tomorrow evening in the 5 o'clock hour. You can also bring up the Mottek On Money podcast on demand at KABC.com. Thanks for listening. This is Mottek On Money on 790 KABC.
Mix a little sports analysis, pop culture, and great interviews, and you've got the Rich Eisen Show podcast.
Whenever I drive separately with Susie, you always have to go first. So sure enough, I pull into the garage. She's not even here yet, which allows me now the opportunity to stand there, just holding the door open, like the gentleman that I am. And I snapped a photograph of Susie's reaction, and there it is. How did you get here?
The Rich Eisen Show podcast, wherever you listen.